Good day, everybody. This is Jim Kenny, and this is for OptionProfessor.com. The date today is June the 28th, 2019. And as always, I do start the broadcast with reminding people that past performance is not indicative of future results, and that short-term trading, option trading, does involve substantial risk of loss, and it's not right for everybody. So check with your clearing firm, your broker, your advisor, and your good common sense before you think about any type of investing, trading activity. Okay, today, again, quick background on myself. If you haven't just tuned in before, I'm Jim Kenny, graduate Boston College, been in the investment arena now for many decades, have taught thousands upon thousands of people nationwide the uses and the risks of options, both on a limited risk basis, cash flow creator, and hedging. And, basically, I continue to do it both on the internet and on the live medium. What I do each week, I try to go over my views, my opinions, my take on what's going on out there. And again, I'm going to start out just by giving you a couple of things that come off the bat here, because we are in a very, very interesting period of time, because we have the meetings over there in the G20, and we've got the Fed talking about some type of a cut in July. So this next quarter is going to be, I think, quite active, and maybe two-way traffic as well. Before we get started, I'll just get into a little bit of an overview. Many of you people haven't checked in just yet as far as listened in, so I'm going to give you a little overview on what I've been seeing and what I see now. Okay, on the S&P 500, which I'm going to get to you right now. Let's bring this chart down. There you go. You can see we went down in December down to 2350. As I've been saying, when we got down there, the 200-day moving average was up at 2750. So my feeling is we could go back towards that number, and we certainly did. What was the big catalyst? The Fed went on pause from their hiking cycle, right? Okay, and obviously since that time, people have been bidding up. After we consolidated 2800, the most logical place to go back, I thought, was the highs around 2750. The highest we've been so far is 2964. Same ballpark area. Now we've come down here towards 2900, and it's kind of stuck between 2900 and 2950 as we go into this weekend with the meeting. What do I think may be happening next? Again, this resistance I don't think is a joke. I think it's real. And if we break under 2900, and the moving averages I think are right around the high 2800s on the 50-day. So if we start breaking under 2900, that would be a warning sign, and certainly breaking under the 2800, I think would be confirming that we might go down. Otherwise, again, some things are showing the moving averages are still in a positive mode. The valuations, while extended, if they drop rates, would obviously be helped by the fact that rates dropped. And of course, the earnings coming out in this for the second quarter, there could be surprises on the upside. There have been a few of those already. And so, there could be a little bit too much gloom out there right before these announcements. So again, if we break through the highs of 2950, I think 3100 could be in the ballpark. That's my range. I call it my red zone. 2950 to 3100 is an area where I think the market could, in a short term, peter out. Obviously, the bottom area of that red zone has been hit, and it has served as very good resistance. But again, there could be a lot of news hitting the fan here. So again, breaking through the highs of 2950 substantially, again, I think opens the door to 3100 in the near term. Okay, now let's see a couple of other things that I'm going to try to give you real quick here so you can see some of the things that I've been looking at. Now, one of the reasons I've been concerned that we might not make new highs is two areas that have not participated that much in the up move. Now, today, one of them is having a pretty good turnaround. This is called the transportation average. So let's take a look at here. And we are up 145 points up towards that 10,450 area. That's pretty much where the moving averages of the 50 and the 200-day come in, somewhere in between 10,003 and 10,005. I'm going to move the chart up here so you can see it better. But the transports, again, getting above 10,500 and closing, I think that would be very positive. And clearly getting back above 11 would be very positive as well. So if this thing is a 1, 2, 3 formation and it's going to take out 10.5, then this would add a tailwind to the stock market, not the headwind that I think it is now. Because look, high over there, tried to get up there, couldn't do it. Tried to get up there, couldn't do it. Tried to get up there, so far couldn't do it. Okay, so the transport's lagging so much, sometimes is not the greatest thing in the world. With regards to the Russell, The Russell is again another laggard, but it is trying to get going. And this 1550 to 1600 area you'll see is very important. Now it's trying to do the same thing that transports are. So transports close above 10,500. This thing closing above, even 1600. That would give a little bit of a tailwind, I think, to the rally. Because again, highs way over here, never could make it, never could make it, and so far never could make it. So again, it is trying to turn here though, and we had a pullback. So you got a 1, 2, and you could have a 3 formation. So again, we break above 2950. These things start breaking out to the upside. I think it opens the door to the rally towards 3100. Now, the other thing we look at is the VIX. On the VIX, where are you? On the VIX, again, it's been holding that 15 area. So again, when it went down towards 13, let me show you here. When it went down towards 13, see that tail? That was kind of the top up around 2964. So when the VIX bottomed and the prices topped, that hasn't been taken out yet. So again, the VIX gets above 17. That's been my number. It hadn't been above 17. Gets above 17, it'll open the door to 20. If it opens the door above 20, it opens the doors toward 25. If you're going to 20 or 25, you're going to be rolling over in the stock market. So that's why this VIX is very important. If it can get under 15 and stay under 15, then I think a rally is very much in the cards. So you might let the numbers dictate your activity, which is, some people like to do that. They like to let the market tell us which way it's going a bit and follow the tape, not try to create the tape. So again, right now, obviously, you're in a very big zone here, 2950 to 2900 on the S&P. You're on the verge of trying to turn a couple things up, the Russell and the Dow transports. And the VIX is right there in the area where if it breaks above 17, you're probably going to have a correction. And if it breaks under 15, you're probably going to have a good rally. So a lot of things going on right on a ledge. And again, two big things is trade. And the other big thing is the Fed, right? So trade in the Fed. Now, there are some numbers going around that I think could be a little bit, shall we say, skewed because of special situations or what I call transitory things. And one would be the ISM numbers. Now, next week, we have G20 on tomorrow. Well, we already had it, and now we're having the Xi meeting, right? But then start Monday, OPEC meets in Vienna, and the ISM manufacturing data numbers are going to come out Monday. Now, ISM numbers have not been that good, but it could be because Boeing is a very big part of that. And Boeing obviously has been in a little bit of a suspense because of the problems they've had with their aircraft. Once those aircraft problems are resolved and those aircraft are back in the air, I'm going to anticipate that orders are going to pick up and the ISM numbers may improve dramatically because the Boeing being on hiatus while they solve their problems, again, has definitely affected, in my view, the ISM numbers. So that's transitory because they will fix that problem at some point and orders will come back into Boeing at some point. And again, you can't read too much into numbers that might be skewed. Then on Wednesday, you've got the U.S. trade balance, you've got durable goods, and you've got factory orders. Now, manufacturing also is being affected by trade. Because if you're going to be manufacturing goods, right, where are you going to go? Are you going to go Vietnam? Are you going to go to, the other alternative places from China because you don't know what's happening with trade? Or are you going to make no decision at all and hopefully get a decision? Well, while you're making no decision at all, obviously it's going to have effect on the manufacturing numbers. So you got to be a little careful getting too crazy about the numbers when you've got, people being in a little bit of the frozen mode, either because they have a problem with their aircraft or because they have a problem figuring out or don't want to figure out or guess how the China thing's going to play out before they make any big manufacturing decisions. So again, those things could very well be transitory, obviously, and that's why you have to be a little bit careful. As far as the Fed is concerned, let's go and let's talk about the Treasury. Because people are saying the Fed may drop 50 points. Some are saying 25 at the end of July. This is obviously the market's up to almost 3,000. Talk about an insurance cut. I mean, if they cut 50 points and this S&P goes up to 3,100 and the gold jumps up to 1,700 and the interest rates go on down to 1.5%, I mean, it's possible they could be creating quite a bit of bubble and volatility with that. That's not really what they're interested in. So I'd I'd be a little surprised if they went 50, but if they went 50, I think you're going to get some pretty big volatility. Okay, but let's look at the 10-year Treasury real quick here and see what it's been doing. Because the Treasury yields have already cut. You'll see in a second. This is a chart on the 10-year Treasury note, meaning what it pays in interest, the yield, right? Okay, so you've seen since they decided to use the word pause, right? This thing has gone from 325.3 all the way down to 2. That's a very, very big drop in yield. Very big drop in yield. So they've already dropped it 125 basis points. So if the Fed drops 50 basis points or 25, they still are way behind what these people have already dropped the yields to, right? So again, this, might be a situation where rather than going down to 175, since it could be a sell the rumor buy the fact, it's possible maybe that these yields would rise, particularly if you see gold take off and the dollar drop, which is the way these things are starting to look right now. So, be careful about being too crazily thinking rates are going to drop because they have already dropped. And consumer spending has not been that bad, and retail sales have not been that bad. And Powell just announced that his idea on household spending or household activity is good. So, and I live in an area where there's still plenty of building going on, plenty of business activity. It does not look like a recession or anything like that. So, again, Fed would like to have a soft landing. Maybe the administration and the business leaders would like to see asset bubbles. So they have a different viewpoint here. The president has used words like, if they drop rates, the market will go up like a rocket. Well, unfortunately, what happens with a rocket is after it runs out of gas, it comes back down. And the higher it is, the further it can come back down and be very disruptive to the economy. And the Fed's not stupid. They understand that, if the Dow goes up to 3,600 in a very quick line, it's going to be very volatile, and it's going to be a situation where people will be very happy they made a lot of money, but the aftermath might be a little bit messy. And Mr. Powell, is not his mandate is not to try to get the S&P to 4,000 in the next 6 months. So the bottom line here is when they meet at the end of July, they're going to have some more data to feed on. They're going to get an idea on a whole bunch of more numbers in the month of July. And in my view, if they cut 25, they obviously are behind. I mean, there's 100% factoring in that they're going to do 25, I guess, at the July meeting. And when the number gets above 50, as far as probability, they tend to go. So the bottom line is there is probably going to be a cut in July. I would imagine it's going to be 25. If it's 50, and then they say that's all we're doing for a while, that could also have a volatile effect on the market as well. So we are definitely going to be going into some pretty big activity here in this July. So, enjoy your 4th of July holiday and come back well rested because as far as I can see, you're going to have the Xi meeting behind you. You're going to have the Fed meeting ahead of you. You're going to have the dollar trends either follow up or not. You're going to be getting earnings coming out. This month of July is going to bring you a lot of information. Whether it's going to give you a lot of volatility or not, I'm not certain. It is the summer months, but it would not surprise me to see a very volatile July and also the subsequent months in the third quarter, August and September. Historically, sometimes the market has some kind of a high point in July, and then in August and September, things get a little bit rocky. So, if you do get a big run up, it may not be all clear sign as much as it might be a blow off short-term high point. So, be careful of it, and keep an eye on the numbers, and don't fight the tape, but don't think the trees grow to the sky either. Okay, so there you saw the yields dropping. Now let's take a look at a couple of other things in the news as far as I can see, and that's the U.S. dollar is starting to crack, but it's not cracking below the support. That's what I'm saying. Okay, so here, what do you got? I've been saying 96 and change, 98 and change, 96, 95 area. There's your zone. So right now, all you've done on the dollar is come back into the lower end of the zone. You do have a tail right there from this week. So if it cannot get underneath that tail right there, then obviously it starts breaking above 96.50. There could be resistance there because of that low number, right? I mean, that low right there. So if we close back above 96.50, they may have caught a lot of people short the dollar. Okay. If we don't get above 96.50 and blow out the lows, then I think obviously a further down move down towards 95 could very well be in the cards. And if we break under 94, then it opens that door for a 10% drop in the value of the dollar. Okay, so those are your numbers as far as I can see. 96.50 on the upside, basis that low right there. 95.75 could take us down towards this 95.95 area. That's where the lows were over here. And then a break under 94, that opens up a much larger downside move potential. Again, if they drop 50 basis points, and if there's other factors to people thinking that that's not the end of it, then the dollar could matriculate its way down. Because again, one of the reasons the dollar has been up is a big yield advantage over everybody else. Well, when you take 50 points off of it and you got more to come, that yield advantage that kept the dollar strong is being taken away. So that's something to keep an eye on. Now, with the goal of the dollar rolling over, well, what do you think has happened to the price of gold? Well, let's go take a look. The price of gold has been rallying lately, but I brought to your attention last week that the gold rally in a short run may be overdone. And you might want to do some either profit taking up there or some hedging because the market hit 442. And when it hit 442, RSI and all the technical indicators like stochastics were up in a very high elevated area. And the volume was like 600,000 contracts, where it normally trades in the 2 to 300,000. So the volume was like 2 or 3 times normal. You had a huge run up. And you had a situation where the technical indicators, RSI and stochastic, among others, was indicating very elevated levels. So as you can see, we hit that 1450 number and we've been kind of trading underneath it. If the market is going to blow out 1450, then of course, it opens up the door to a lot higher levels. Let me try to give you a longer term chart and show you what I'm talking about. But again, the short-term bullishness on gold is very high, and of course, that sometimes leads to a bit of a pullback. Obviously, we already pulled back about $40, so there you had a pullback. But you could have a more substantial pullback if, in fact, the dollar doesn't break under 96, and if, in fact, they only cut a quarter of a point, and that kind of thing. Let's take a look at the longer-term graphs. This is all data on gold. Oh, let's go back and get something for, say, the last 5 years. Last 5 years on gold. Taking a look at it now, and you'll see that it had been in a trading range of 1350 was the high, and what was the low? Let's take a look here. Up, go down. There you go. All right, 1350 was the high. 1350, 1375, right? Boom, 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 boom. So if we pull back, 1350, 1375 may form some support, and that might not be a bad time to take another shot at it. But as you can see, look at that volume. High volume here and at a high point. High volume up here at a high point. High volume here, low point. So sometimes at turning points, the volume gets up near that 2 million area, and that obviously has been a time that's happened. So that's another reason why the high point at 1450, coming up from 1250, not that long ago, that's a $200 move. But you are above this stuff here, and that's very important. So I think the gold market has turned to the upside, but it may have gotten a little bit ahead of itself, and you may be able to buy on a dip. May. Okay. All right. Now look at some of the mining activity here. Two of them off the bat. GDX is your gold miners. Let's see what that looks like. It had a nice rally. I don't know exactly what it's doing today. We'll find out. There it is. It's up 18 cents today. Went up towards 25. Again, it has that little bit of a blow off above the highs to 26, right? And now it's struggling a little bit. So bottom line is, could you have a pullback towards 23.5 to 24? It's possible. Okay. And of course, if it takes out there, there's not a lot of real estate to hold it, right? Until you get back up towards 32. So there's going to be a blow off on gold. It would probably involve a new high and a close above the new high, and that would set the stage for a pretty good advance. How about the juniors? The juniors are the smaller ones on the gold mining shares. And they were having some trouble, but they played a good game of catch up. Now let's see what's going on. Similar though, they have that little high up there. So the longer that high is up there, the more possible that you could see a pullback. And these are right up against resistance as well. Okay, but they had a pretty good run up there. And now, so that's what you're looking at there on the juniors. A lot of people like to look at these companies that have royalties, and I think one of them is called Royal Gold. And let's take a look at a couple of the royalty companies because they have become kind of popular with people looking at them. So RGLD is one of them that seem to be involved in this. And you can see that they have been doing pretty good, making new highs here. New high just happened here recently. So you can see it kind of trying to break out. And that's they're involved, I believe, in some royalty activity. And then there's another one up in Canada. Well, there's a number of them up in Canada, but that's another one to keep a little bit of an eye on if you are bullish and you think that there could be some further activity in it and you want to do gold through a different type of a prism. Do your homework, do your research, see if it's right for you, ask the people who are involved with your money if it's right for you, and then proceed accordingly. All right. I like to, if I could, go over a couple of different sectors. And let me see if I can do that quickly here. I had been looking at some of the oil stocks, and I brought these to your attention last week. Let's see how they're doing, because OPEC meeting is what is it, Tuesday? When is it? Monday open. So they're going to be meeting on Monday. Some of these things pay good dividends. I don't know if they're going to keep going or not, but they're worth taking a look at here. Royal Dutch is at 65. And so, it's been going up a little bit, having some trouble up here, but the dividend ain't bad. Okay. Now you have to figure out what's going to go on with the price of oil. But again, they are starting to turn a little bit. Looking at the detailed quote, let me show you what the 50-day and the 200-day average look like, and see if they'll give us something on that real quick. Boom. Okay, there you go. So Royal Dutch is 62 and 62. So they're almost chained. They're about the same price. So the longer we're above 62, the better. And again, the volume's a little light. That's not the greatest news. But again, staying above 62 would be very helpful to get the moving averages to cross and turn to the upside. You can look at 60 as a very big number here. So if we can close above this 65 and put 70 into play, get above 70, and then you're off to the races. Again, underneath, you don't want it under 60. And it is paying pretty good dividend while you are watching the movie. Another one that pays a pretty good dividend in the oil area is British Petroleum, and BP is paying just under 6% on the dividend. And this one again, it's trying to hold the 40 number, right? And getting above the 44 number, get some momentum above 46. That would be good. A lot of it's going to hinge on how it happens in Vienna. And again, what happens with the crude price itself. Let's take a look at the crude price itself so you get an idea of what is the price of crude doing. Let's take a look. It had rallied nicely up towards 60, but I don't know, is it going to be able to hold or not? Let's and see what it looks like. Down today. So before the OPEC meeting, it's coming down. Again, it had a good rally, but again, it is anemic because, again, we have a tremendous amount of energy coming out of our country now. 75 all the way down to 45, all the way back to 65, back down to 50. 50 is a key number. You start seeing a 4 handle on it, that's not good. So there's your kind of support at 50, and your resistance, you see those lows? That's why it's having a hard time getting through 60, because those lows are now resistance. So a close above 60 would give us open the door up to 65 or 70 maybe, and a close under 50 would be stick a fork in the oil market, I think. So it could obviously meander between 55 and 60 for a while, because you see that number there, 55. That's going to be a little bit of support possibly. So in between 55 and 60 is could be where it meanders until it gets more information on where the next big direction would be. So there you go. That's the outlook on crude, which makes the stocks a little iffy because obviously we break down under 50 and 55, those stocks will probably go down. Conversely, if you break above 60 and get going, there could be value in those stocks. So keep an eye on that and see what you can find out. Okay, what else do I have on the docket here for you is, high yield has really gone on a rally, and this month was the biggest month in like since 2017 for issuing junk bonds. The spread, meaning the difference in yield between junk bonds and treasuries, very tight. People are desperate for yield. They don't care. It doesn't seem like they don't care about the covenants. They don't care about what's backing them. So you can see when things go south, and when the stock market goes south, these junk bonds can get whacked pretty good. But when they say they're pausing on easing and the stock market rebounds like it did, these things obviously can come back into favor. But again, they seem a bit extended up here. And it seems like a situation where you'd want to be careful up here in the junk bond market because you might not be getting paid for the type of risk you're getting up at these levels. Um, another Another thing people are reaching for yield on is floating rate loans, short-term floating rate loans, and there is a ETF in that people have been trying to make. I'm just using these for illustrative purposes only, but this is one where again, it's let me get to this. Let's get rid of that. Get back here. They have been meandering in it, but you can see they are kind of weakening a little bit here. And so the bottom line is, if you start getting any kind of news of any type of concern of a short-term nature with high risk short-term loans, then obviously these could have some trouble. People go for them though because there is yield on it. Just like the bank Deutsche Bank has a preferred out there that people are taking a shot at because they want to get yield. And the preferred on Deutsche Bank here is yielding almost 90 and is trading at 25.50. And although Deutsche Bank has had very bad news on it in many respects, it has been trading right around 25, 26 now for quite a while, and it has been yielding a pretty good amount there. So again, investigate all the different ways to get income if that's your cup of tea. And of course, that would be your corporate bonds, either investment grade or high yield, or it could be your short-term riskier floaters, or it could be munis, or it could be CDs, T-bills, or whatever. But again, investigate the credit quality on everything before you do anything one way or the other, because again, sometimes people get very excited and they forget things like what are the covenants behind this debt and what is the liquidity going to be if people wanted to come out. Right now, the whole world is betting on what? They're betting on interest rates are going to be cut in July, either 25 or 50 points. They are betting that obviously the stock market is going to respond very positively to that. What else are they betting on? They're betting on that the dollar is going to drop. What else are they betting on? They're betting that the gold is going to continue to rally. And this is where people seem to be positioned as we go into this month of July. Again, you've got the Fed meeting at the end. You've got stats that are going to be coming out. You've got earnings that are going to be coming out. You've got this meeting with Mr. Xi and Mr. Trump. So you've got plenty of wood to make a fire one way or the other. And we'll have to see exactly, which way they break. Again, a lot of volatility in the month of June, right? And June is going to be over here. So obviously we look to July and see what's going to happen. Stock market has been wild today. You can see it was way up at 26,640. It went down to 26,540, and now it's back up to almost 26.6 again. Same thing with the NASDAQ. Back, forth. So again, the rumor and innuendos coming in and out. People are positioning before this weekend. And then next week, they'll be positioning before the long holiday with regards to 4th of July. All right. Lots to cover. You guys have any questions? Do yourself easy here and just email me a question. OptionProfessor, OptionProfessor @gmail.com. And let your friends and associates know that they can tune in once a week free of charge by just getting the link. And the way you get the link is going to OptionProfessor.com. Okay, and that'll get you can get the link there every week, and you can shoot me an email if you have any questions at all. Got a big week ahead of us, a month ahead of us, and a big quarter ahead of us, so it's going to be very exciting. I'll be back with you next Friday, and again, until then, shoot me an email, optionprofessor@gmail.com. Have a great weekend, a safe weekend, and I'll be back with you next week. Good day, everybody.